Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. As always, for the markets, it's a stellar first day of the new series. The midcaps are powering through, so a lot to track on the show as well, Vivek.
A lot to track on the show, and what a stellar rally it's been, especially in the broader end of the markets. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks build on the gains. Metal, healthcare and IT lead the rally. Private banks, FMCGs, midcaps fare better.
Emphasis gains after reporting Q1 numbers. EBIT margin surges sequentially while revenue growth is weak. Management tells CNBC-TV18 that they will deliver above industry growth in FY25. Sand is under pressure after revenue dips 10% in the first quarter. The company has also lowered revenue guidance for FY25, which brokerages such as Kotak and Nuvama believe will be challenging to meet.
Biocon gains in trade as sources suggest that the company is likely to raise 4,000 crore rupees via a QIP route. Proceeds may be used to pay debt, and the QIP could be launched as early as next month. Stock up over 3%.
Draft RBI rules propose banks to sharply increase liquidity coverage and deposits from next April. Bond yields fall to multi-year lows and expected higher demand for bonds from banks to maintain liquidity cover. Federal Bank shares down nearly 4%.
Industar gained sharply in trade as the board is set to consider a proposal to buy back shares in its meeting next week.
Okay, all right. Those are the top headlines. The Nifty up almost 400 points right now. All the sectoral indices, they are in the green. We have the mid-caps, which are powering through. And at every tick, we are seeing an uptick, actually. There's no letdown from those levels. The Bank Nifty, though underperforming today, is still in the green. 0.6%. That's what we are calling underperformance in a market like this. But, of course, it has recovered from the red levels that we saw earlier. Metals, IT, autos, you name it, and all of these names are doing well. And a very sector-specific or even stock-specific for that matter, earnings, news updates, they keep coming in.
Earnings, news updates, regulatory changes, all of them are coming. It's a very action-packed day. In fact, the start of the day, it appeared as though the Bank Nifty would drag significantly, but that's not been the case. We also have results. Shriram Finance is up almost 5.5% after it's just reported its numbers. But we will focus on the mid-cap stocks now. We have Hormaz at the wall, who's taking us through all of the mid-caps that are moving around in the session.
Friday cheer, if you would like to call that. Everybody wants to have a bit of a relief after the week that we have had on a Friday, and both benchmarks, the broader markets, all of them doing very well today. Start off with some of the gainers then in the broader markets, and SJVN is leading that pack. At one point was up almost 11 to 12%, but then that stock has now cooled off slightly from the day's high, but still 7.5% higher after that mega order win. Piramal Enterprises is having a good day, 6.5% higher there, and Ashok Leyland, after the upgrade that came in from UBS this morning after the results, 6% higher among the top gainers on the auto index. Now, insurance stocks, all of them doing well today. Pick any and you would find them trading with gains. New India Assurance, GIC, both of them seeing double-digit gains today. LIC also now at a record high, nearing levels of 1200. It's up only 2%, but a record high nonetheless. Earnings reactions continue, and they are on both sides of the spectrum. Emphasis is up almost 7.5%. Cyient, as you highlighted in the headline as well, not having a very good day. But Laurus Labs, numbers were poor, but the management held on to the guidance, and that is reflecting in the stock price, 4% higher today. Some stocks doing well on the back of volumes, and Home First Finance is up 3% on very strong volumes. Mankind Pharma on the downside is trading with gains, with losses of around 3%, a confirmation of our news break. And Karur Vysya Bank also trading 3.5% higher on very strong volumes. And one sector that has also done well today is the chemical space. Almost all chemical stocks doing well. Vinati Organics, the amine stocks are doing well, and SRF also having a good day on significant volumes. Back to you guys.
All right. Thank you so much for that, Hormaz. Let's get in some corporate conversations going. Chennai Petroleum Corporation reported a weak set of Q1 FY25. This was largely led by lower cracks across products. Operating profit margins decline as well. To discuss this and more, we have H. Shankar, Director Technical and MD of the company, joining us now. Mr. Shankar, good afternoon. Thank you so much for joining us today. Q1 was weak for the refining industry overall. Can you give us a sense of how much did cracks fall in Q1 across products? And have you seen a recovery now in Q2 in terms of GRMs and refining margins?
Good afternoon, and thank you very much for having me here. It's really a pleasure to be talking to you about the performance of CPCL. We are very proud to be declaring that we have done very well in the Q1. And we have done extremely well on the operating side, and we have reached many records in the Q1 performance. But coming down to the cracks that you were mentioning, I think if we look at our overall product portfolio, almost about 45% is dependent on the diesel. So diesel cracks were roughly hovering around $10 per barrel. So we had a little bit of the issues on this, but looking at the overall scenario of how the cracks have been moving as compared to previous quarters and previous years, I think with the kind of performance that we have had, our operating performance has really given us the good result that we really got this quarter.
Okay.
And I think, yeah.
Mr. Shankar, one more thing what we want to know, we were just asking you about how GRMs panned out as far as the quarter that just went by. How is it looking in Q2? What is it that you anticipate for the rest of the year?
Okay, GRMs, if you look at the overall scenario, CPCL has been consistently performing better than the Singapore GRM, which is considered as the benchmark. And if you look at the overall performance this quarter also, we have done almost $2 more than what the Singapore GRM is. And coming forward, looking forward to the performance, I think if you look at our track record of the past performances, I think we should be able to consistently manage these kind of performance indicators, and we will certainly do well for the company on this.
Okay, so, yes, your margins are better than Singapore GRMs. What are Singapore GRMs trading at right now, Mr. Shankar? Have we seen an improvement? And is there an indication that FY25 will continue to be at these levels, considering that a lot of refining capacity is coming out overall globally as well?
Yeah, Singapore GRM has marginally improved if you compare it with the Q1. There has been a slight improvement on the Singapore GRM. And so is the case with the other product cracks also, which are slightly improving on account of that. So looking forward, we are very bullish on this matter. And we expect that looking forward, I think it's too early now to predict how the financial year will pan out to, because the cracks have been extremely volatile over the last couple of periods, but we are trying to optimize our operating areas so that we can actually do much better on the marginally improving on the Singapore GRM. So we are looking at basically moving towards the operational excellence. That is what our mantra is.
Okay, so Mr. Shankar, you strive to go and report margins above what the Singapore GRMs are. We got that. Now we want to talk to you about the JV that you have with IOCL. We understand that IOCL is the majority partner over there. We also understand that from the initial capex that you had envisaged, there has been a cost escalation. So when can we expect the Kaveri Basin refinery to come on stream, and also give us a sense of what is the kind of contribution that you expect from there in terms of financial parameters?
There is a huge gap in the refining margin that is required to be bridged by adding volumes to the refining in the refining sector. And IOCL and CPCL as a JV 75 and 25 by CPCL, we have moved into the CBRPL space. And CBRPL is a very strategically located installation. And I believe that we are now moving towards the final closing out of the necessary statutory approvals. But needless to say, we have also done enough amount of engineering on the project so that as soon as we get the clearances, we should be able to move forward and award these contracts and move towards a closure. We have roughly targeted a 39-month period for completion of the project after all the approvals are received, looking into the pre-engineering activities that we have already started. So I think looking at it, roughly 39 months is what we are starting the commissioning aspect. Because a refinery of that magnitude cannot be commissioned at one go. So it has to be periodically, it has to be ramped up starting from the basic crude units to moving towards the secondary units and moving towards the petrochemical requirements. Also, it's a gradual process. So starting from 39 months, we should be able to begin the commissioning aspect of the refinery. And we are very, very optimistic to it. Yes.
No, yes, of course, that's a huge capacity that you're coming with. What would that do to your debt, Mr. Shankar? Now there has been a cost escalation. What's the absolute debt right now? Your net debt to equity has gone up 2.49 times right now. What is the level that you're comfortable with?
No, actually, we have entered into that project on a debt equity of 2:1. So I think with the current condition that the company is going through on the financials, I think it is a matter of only time that we will be able to sail through on the managing the financials also. Because you must have read from our other portfolio that we are also looking at some other projects at CPCL Manali so that we can de-risk our other businesses and move towards other areas. So we are looking at the kind of, we are comfortable on the financials. That's the reason why we are also looking at major projects coming up in Manali side also, in addition to what we are planning in Nagapattinam.
Thank you. Thank you so much for your time, Mr. Shankar. It was a pleasure having you, and thank you for sharing your thoughts. Let's now slip into a short break. The management of Thangamayil Jewelry joins us next to discuss the Q1 numbers and the way forward. Stay tuned. Welcome back to Midcap Radar. Thangamayil Jewelry is the next management on the show. The company saw a sharp jump as far as the revenue was concerned, almost 27.3% higher. However, the margin contracted on a year-on-year basis. Do wrote the company actually declared the highest ever Akshaya Tritiya sales in 2024. We are joined by S.M. Lakshmanan, the Vice President of Finance and Accounts at Thangamayil Jewelry. Good afternoon, Mr. Lakshman. Thank you so much for joining us. First up, before we delve into the Q1 numbers, we want a quick comment from you in terms of, how exactly will you be impacted by the budget announcements as far as gold jewelry is concerned, and what is the kind of inventory hit you may have to take on the back of this particular development?
Good afternoon, Vivek. Thank you for the opportunity given. The 9% duty reduction is actually a welcome move for the industry. It is expected to increase the gold demand and the gold sales further. It's going to be a great relief for the consumers. And as far as the company's profitability is concerned, yes, we have mentioned in our results very clearly, quantified the amount that due to the under-realization of inventory price and the making charges, there could be an impact of 29 crore rupees in the subsequent quarters as and when the actual sales takes place. Anyhow, it will be able to be made up by good amount of further increased sales in terms of gold. Okay, I have tried to answer the question which you posed. Let me talk about the first quarter of this financial year. It has started on a very strong note for Thangamayil Jewelry Limited. Highest ever quarterly turnover in the company's history, 1,220 crore rupees. As Vivek just said, it's a robust 27% year-on-year revenue growth.
Yes.
Akshaya Tritiya during the quarter, which fell in the first week of May, company had a whopping 45% year-on-year revenue growth. 24.5% gold sales volume growth on Akshaya Tritiya day. Okay. In terms of the first quarter sales volume, gold has increased by 9%.
Yes, Mr. Lakshmanan, yes, that is something that you've given in your presentation, and we have been flashing that as graphics as well. But you want to understand more about the outlook. One, you said that 29 crore will be the inventory write down in quarter 2, which of course will be taken care of by the volume increase that you see because of gold prices going down. Does this calculation include the tax already paid as well? Just wanted to clarify that. And in FY25, what is the outlook going forward? The 29% growth that you saw in quarter 1, will you do better than that in the rest of the year?
Yeah, we have mentioned in our results that it is going to be in the subsequent quarters. So the impact need not be in Q2 exactly. It will be in the subsequent quarters as and when the sales takes place. And as far as the remaining quarters of the concern, the first quarter's tempo is going to be maintained by the company in terms of top line performance. The reasons are the monsoon is expected to be above normal. That is what the forecast says. The first point. Second one is the remaining quarters of this financial year, Q2, Q3, Q4 are going to be busy with festivals and wedding activities. For example, August first week is going to start with Adi Utsav. Adi Utsav is a Tamil Nadu water bodies based festival. It's going to have a grand sale. Q3 we are going to have the national celebrations, Diwali, Dhanteras, and in Q4 Magara Shankranti, Thanksgiving year-end offers, and Basant Panchami. So the company is expected or confident of maintaining the first quarter's top line performance in the remaining 3 quarters also.
Mr. Lakshmanan, would you be able to quantify that? First quarter, top line grew by close to 30%. So FY25 on the base of FY24, also taking into account, the kind of hedging one-time hit you will have to take. Could you give us a guidance for top line growth, the EBITDA margin, and what will be the bottom line growth that you expect to see on the base of FY24?
Yeah, first quarter we have done 27%. I am confident that the company will be able to maintain that 27% top line guidance, and 1,220 crore which we have made in the first quarter, we will be able to achieve with this, 4x for the financial year 24-25.
Okay. All right. Mr. Lakshmanan, we would have loved to chat a lot more, but we are completely out of time and we do have to take a quick commercial break. But that's the word coming in from Thangamayil Jewelry, sounding very confident on the FY25 roadmap as well. Before we take a break, a special announcement for all our viewers about an exceptional evening where we are honoring the heroes of India's economy. Prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. With the $5 trillion economy on the horizon, we must acknowledge the heroes, our small and medium enterprises. India's one of the coveted SME award platform is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBC-TV18 SME Champion Awards is all set to finally announce the winners today at 5:30 p.m. onwards. Okay, it's a stellar rally, 400 points higher on the Nifty right now, very, very close to that 25,000 mark, just 200 points away. It is also led by the gains that we are seeing in the metal index. The Nifty metals is up around 2% right now. A lot of broader market movers that we have. The Midcap index, that one is up around 2%. We have something like an Ashok Leyland, which is up 6%. We have Tata Power, which is up 5%. So IT has made a comeback, as we have been talking about it, 4% higher. So the entire IT pack in the mid-cap space as well is doing really well today. So that is what the market action is looking like right now. But with that, we'll do one thing. We'll take your leave on this edition of Mid-Cap Radar. Your stocks when we return.